Brian Shannon here from alphatrends.net. Today is Saturday. It's the 29th of October, 2016, and we had a rough week for equities this week with the S&P losing a little less than a percentage point. The Russell 2000 got hit the worst, really, of the major indexes, down 2.5%, and those biotechs are doing what they know best, which is to continue lower in the downtrend that they've been stuck in. Oil also lost ground, so as did bonds. So let's take a look at the charts and make some sense of it all. As we know, we've been stuck underneath this declining 50-day moving average in the S&P 500, and that's kept us defensive here for a while as this prior band of resistance, which turned into support right here, became resistance once again. And now where we are when we back it up a little bit, even to a weekly time frame, is we see that where we're trying to hold is support and where it's having a hard time breaking down is this prior band of resistance over here. So when we have mixed messages on multiple time frames like that, the best case is to look at and continue to focus on the intermediate term, which is my primary trend as a swing trader. So for this week, we saw the market gap open on Monday, and it was met with selling. The market stayed below the volume weighted average price for that day, and then for the week, we stayed below that purple line right there. That's the volume weighted average price for the week. So we tried to recover a little bit on Thursday morning. That quickly failed and got us back below the 5-day moving average. The market tried to hold some support in here, but that support was broken on Friday late in the afternoon, and that support now is looking like it has the potential to become resistance. For this market to become more neutral on an intermediate term basis, we're going to have to see it back above 214 to 214.25. That's for neutral. Right now, the intermediate term trend is bearish, but it is within an overall area of where we see this prior resistance. So it's tough to make a case that we're going to make a big move in either direction. And with earnings still flowing out rapidly, it's really a stock by stock basis, and there are some great opportunities on both sides of the table. And if you're a short-term, scalper in the S&P 500, then there has just been tremendous opportunity here this week where we've had morning bull markets and afternoon bear markets basically. But anyways, let's go back now to the NASDAQ and take a look there. The NASDAQ is still in better shape, but it is closing again once again that is below the 50-day moving average. So early in the week we had gone out to all-time highs here in the NASDAQ 100, and from that failed move, possibly we're seeing this faster move lower. We are at that 50-day moving average. We're also currently at this trend line that I've drawn in from the September low. If we take a look at the volume weighted average price from the September low, we just closed below that as well. So they're kind of in the same place. The bigger level, the Brexit volume weighted average price down at 115, and it's certainly possible that that could happen. Right now we have to look at this market with a real eye of suspicion because it is below the declining 5-day moving average. Now that's from the intermediate term standpoint, but we have a pattern of lower highs and lower lows with a declining 5-day moving average. To get back to neutral on the intermediate term time frame, we're going to need to see it back above 118.25 to 118.50. Until that happens, the odds favor further downside probing to levels of potential support, one at this area, and then secondly right in here, and then the volume weighted average price from Brexit falls between those. Let's go back to the S&P for a moment, because the volume weighted average price from Brexit has also been something that has been offering resistance here. Now you can see that purple line for, it's been closing below it each and every day for about the last 2.5 weeks. So that's clearly, an important event in the market, and what the volume weighted average price from that day represents is the average price that the S&P 500 is traded at since that major event for the market, a major shock to the market. And what that means is the average participant since that time is losing money. Doesn't mean they all are, of course, but we have to look at it as a consensus. The Russell 2000 also broke below the volume weighted average price from Brexit here, and we had seen the first level of support, which was holding at this 120-ish level, break down earlier in the week. So here we saw the same thing, a gap higher, and then just a beautiful pattern really of lower highs and lower lows in this Russell 2000. It is still, trying to buy into this is just foolish. When you have a pattern of lower highs and lower lows, that means the trend is lower, are on the time frame we're looking at here, which is an intermediate term time frame. Playing guessing games that it's going to hold its support and buying in there doesn't do you any good when it continues to break lower. If you do that, then you need to have a level of where your stop is. We could also take a look at a Fibonacci off of here and see that we've now come down close to retracing 50% of the moves since Brexit. But currently guilty till proven innocent in a downtrend. In order for this market to get back to a better shape, it's going to have to get back above this prior band of support. Semiconductors still holding up the best of any group. You can see I have the volume weighted average price from this September low here, kind of ties together with that 50-day moving average. And on the daily time frame, we can look at this high back earlier in the month, and then we have a lower high and we have this low. So this is the most likely area where the semiconductors will find some support down near 66. If you happen to be trading super aggressively or are short this, one, with a rising 50-day moving average, the odds don't favor success. And two, we're still below a rising 5-day moving average. Now, for this week coming up ahead, I would say that if we stay below 68.50, then perhaps it's an opportunity to look at a pattern of lower highs and lower lows potentially developing that would bring us down towards 66. It's the first time in a long time that I've spoken about a potential bearish scenario for the semiconductors. Now we're starting to see the possibility of the evidence emerging. It's not there yet, but we see the possibility that the evidence is emerging. And what would be most certain, give me the most certainty, is if that 5-day moving average started to turn lower and we made a pattern of lower highs and lower lows below it. The biotechs, as I said, they're continuing to do what they do best, and consolidations tend to resolve themselves in the direction of the primary trend. So when we look at the daily chart of the the biotechs, we're below a declining 10, 20, and 50-day moving average. We're below a 50, 100, 150, and 200-day moving average, and the volume weighted average price since the beginning of the year is also up here, which you'll see makes sense because a 200-day moving average and the year-to-date volume weighted average price. This market has been open for 208 days this year so far, so they're going to tend to cluster in the same area right now. But as the old saying goes, if they don't scare you out on the way down, they will typically wear you out. That in order for a longer-term bottom to emerge, we need a flat to rising 40-week or 200-day moving average, and then a pattern of higher highs and higher lows to develop above it. We're clearly not there. This group continues to be under pressure. Now we'll be looking at this prior little band of support up here as potential for resistance. Apple reported earnings, and here's the volume weighted average price since the earnings. It looked like they were going to hold for a bit there, but got thwarted up at this prior little band of resistance and gapped lower. So now we see that actually this was the earnings. But what we see is the volume weighted average price from the last important prior low here, kind of holding in that area. I would think that Apple is, no reason to buy it, and I wouldn't want to be aggressively shorted either. But you have the possibility that we come back in towards this 50-day moving average. Worst case, maybe down to this trend line. I just think it's an avoid for now. Some of the stocks we had, this is the blog post I did earlier in the week talking about on Alpha Trends, we bought this stock, C-Trip, as it was breaking a near-term level of resistance right here. As we typically do, we sell some into strength as it hits a short-term objective near 48. We sold some up in here as I was telling subscribers that now's the time to take some off up in here because it's breaking out to a new high, but it had made a big move prior to that. So you have to ask yourself, where has it come from? And the people who bought that breakout are looking at an old method. They're looking at something that doesn't work, buying a breakout in a stock that's already extended. Where has it come from? So we were fortunate enough to be able to sell some at that breakout level, and we got stopped out of the balance here. Some people, asked me, Brian, I want to hold this longer term. Where should I put a stop? I said, well, if you want to hold it longer term, that's up to you, but let's listen to the message of the market. The market said get out. This would be your worst case stop. And if they got stopped out there with a loss, or break even, it avoided at least this larger loss. On the day that Tesla reported earnings, the stock gapped up right to the year-to-date volume-weighted average price. And a lot of people were excited about this. I put a blog post about this, that be careful. Right now, it's at the year-to-date volume-weighted average price. We're at the conjunction of the 50 and the 150-day, I'm sorry, the 100 and the 200-day moving average in this area. And don't expect this rally to hold. It gapped up and just got crushed from there. So, not crushed, but still, Tesla looks like, the path of least resistance in the intermediate term is lower. We've got lower highs emerging on this. We've got a band of support. This looks like a descending triangle. Buyers sellers aren't waiting for bounces to 220 or 210 anymore. They're getting more aggressive and they're testing the band of support on a more frequent basis. When that happens, it's typically before a breakdown. So be very careful like that with that stock. Just like VRX, tough week for Bill Ackman. This stock is still a dog. It will be for a long time. We've got that declining 200-day moving average. If they don't scare you out, they will wear you out. We also got involved in WDC for a trade right over in here. Let's see what else. Let's talk about IPOs, because IPOs 2-3 weeks ago, nobody could get enough of those, but now we're seeing they're coming back to earth. Stocks like ACIA Communications, which came public back in May, crashed through its volume weighted average price from the IPO. There's no support. You don't buy stocks on pullbacks with a declining 5-day moving average. We also saw NTNX, which nobody could get enough of, below all these volume weighted average price levels, down to the lowest level since it came public. And everyone loved this company just 2 weeks ago. And how many people have lost money? Pretty much every single person who was bought in the aftermarket. There are a few people that bought underneath here that are making money. Most likely they'll lose money. The company did their IPO at $16 a share. A lot of times that becomes a magnet for where this stock will go. So it's guilty till proven innocent. Twilio, guilty till proven innocent. Gone past the volume weighted average price, gone past all these retracement levels. It is a disaster right now, and most people are losing money in it. It's in a downtrend, lower highs and lower lows. And a stock like TPIC, which came recently, SITE, beautiful accumulation, stage 2 markup, stage 3 distribution, stage 4 decline, guilty till proven innocent. That'll do it for me. Have a good weekend, and I'll talk to you next week. Thank you.